95% of day traders lose money. You are not here to be 95%. You do not know yet that everyone who has ever sat down at this desk has said the same thing. Level 1. The beginner. You are 24 years old. You have $15,000 in a brokerage account. It took you 14 months to save it. Your job is at a logistics company, $42,000 a year. You eat lunch at your desk so you can watch the market open at 9:30. You found trading on YouTube. A man in a Lamborghini explained risk management in 11 minutes. You watched it 4 times. You opened a Weibo account on a Thursday night. You deposited $15,000 on a Friday. You felt something close to electricity. Your first trade is 200 shares of a semiconductor company. You saw it mentioned in a Reddit thread at 11:47 p.m. You bought at the open. The stock moved up 2.3% in the first 20 minutes. You made $690 in 20 minutes. You did not sell. You wanted more. By noon, it had given back everything. You sold at a loss of $340. You tell yourself it was a learning experience. This is true. You do not yet know what you learned. The YouTube man did not mention that 80% of day trading volume is executed by algorithms that have been running since before you were born. He did not mention that the order flow you are reading was designed by people with PhDs in mathematics at firms with server racks co-located 30 feet from the exchange. He did not mention that when you press buy, someone on the other side of that trade pressed sell. That someone is not guessing. You make 47 trades in your first month. You are down $2,300. You tell no one. You fund the account with $2,300 from savings. You call it tuition. You open a journal. Day 1. You write, I will be disciplined. You mean it completely. You are not disciplined yet. Discipline is not a decision. It is a condition produced by repetition and loss. You have not yet had enough of either. Level 2. The serious loser. You are 26. You have lost $31,000 across 2 years. Not all at once, in pieces. $4,500 there. 1 week in March where everything worked and you made $6,800 and thought you had figured it out. Then 2 weeks in April that took it all back, and then some. You quit your logistics job 4 months ago. Your savings runway is 6 months. You did not tell your parents you quit. They think you got a remote position at a tech company. This is not true. You are sitting in your apartment at 7:58 a.m., waiting for pre-market to open. You have a setup now. 2 monitors, a level 2 quote subscription at $89 a month, a scanner that filters for stocks with volume spikes above 500% of the 30-day average, a paper on your wall with your rules written in black marker. You have broken every rule on the paper at least once. The paper is still on the wall. Your strategy is momentum trading. You look for stocks moving fast on high volume in the first 30 minutes. You have backtested this on 3 months of data. It works in backtesting. Backtesting always works because you already know what happened. Your biggest problem is not strategy. It is the 11 seconds between when you identify a setup and when you pull the trigger. In those 11 seconds, your brain runs a calculation that has nothing to do with the trade. It asks whether you can afford to lose this. The answer is always the same. You press buy anyway. You have 1 good week in January, $8,400 profit. You post a screenshot to a trading Discord. 47 people react. You feel something you have not felt since your first trade. That night, you increase your position size. The following Monday, you give back $5,200 in 3 hours. You do not post that screenshot. The journal has 340 entries now. You read them sometimes. The early entries say things like trust the process and stay patient. The recent entries are shorter. Most of them say the same thing, same mistake, different stock. Level 3, the developing trader. You are 28. You are not profitable yet, but you are less unprofitable than you were. The distinction matters more than it sounds. You went back to work 8 months ago, not the logistics job, a remote position at a financial data company, $58,000 a year. You trade before the open, during lunch, and after close. You treat it like a second job because it is. The income from work means you are no longer trading scared money. Trading scared money is the fastest way to make every mistake available to you simultaneously. You have narrowed your strategy to one setup, 1. Not 5, not 3. 1. A specific pattern in the first 15 minutes of market open where a stock gaps up more than 4% on earnings news, pulls back to a key level, and holds. You trade only this. You pass on everything else. Passing on trades feels like losing money. It is the opposite of losing money. Your win rate is 44%. This bothered you until you understood that win rate is not the number that matters. What matters is the ratio between what you make when you are right and what you lose when you are wrong. Your average winner is $1,240. Your average loser is $380. The math works even when you are wrong more than you are right. You have a risk manager now. It is not a person, it is a rule. You will not lose more than $500 in a single day. When you hit $500, you close the platform. You walk away. The first time you did this, you sat in your car in a parking lot for 40 minutes because you could not stop thinking about the trades you were missing. You did it anyway. You went back the next day. The market was still there. You read a book written by a trader who ran a desk at a major bank for 19 years. He said something you wrote on the wall above your monitor. He said the market is not a place where smart people make money. It is a place where disciplined people take money from emotional people. You have been both. You are learning to be only one. Level 4. The consistent trader. You are 31. You are profitable. Not dramatically, not Lamborghini profitable, quietly profitable. Last year, you made $67 net of commissions and data fees. The year before, $41,000. The year before that, you lost $18,000. The direction of the line is what matters. You quit the data job 6 months ago. You trade full-time from a second bedroom converted into an office. 3 monitors, a direct access broker that routes your orders to specific market makers based on fill quality. You care about fill quality now. Half a cent per share matters when you are trading 2,000 shares. Your day starts at 5:30 a.m. You read pre-market news, check overnight futures, review your watch list. By 9:15, you know exactly which stocks you will watch and at what price levels you will consider entering. You do not discover trades at 9:45. You prepare them at 5:30. You trade for 2 hours, sometimes less. The first hour after open and the last hour before close are where most of the volume and volatility live. The middle of the day is slow and random. You have learned that trading in the middle of the day is a way to give back what you made in the morning. You have a monthly income now that covers rent, groceries, health insurance, and one trip per year to somewhere that is not this office. It is not what you imagined when you watched the YouTube man in the Lamborghini. It is real. The imagined version was not. Your friends from the logistics job ask what you do. You say trading. They ask if you make good money. You say enough. This is true. You do not tell them that enough took 7 years and $31,000 in losses to define. The number sounds different when you know what it cost. If you have made it this far, you are exactly who this channel is for. A subscribe helps me keep making these. No pressure, but I would appreciate it. Level 5, the professional trader. You are 35. Last year you made $340,000. The year before, $210,000. The year before that, $290,000. The variance is not failure. It is the nature of the instrument. Markets have regimes. Some regimes favor your strategy, some do not. You have learned to size down when the regime is wrong and size up when it is right. You trade your own capital exclusively. $2.1 million in your trading account. The size changes everything. A 1% gain on $2.1 million is $21,000. A 1% loss is the same. You do not think in percentages anymore. You think in dollar amounts. The dollar amounts are large enough that thinking about them while you are in a trade will cause you to make the wrong decision. You have trained yourself not to think about them while you are in a trade. You have one rule above all other rules. Protect the account. Not grow the account. Protect it. A trader who loses 50% of their capital needs to make 100% to get back to even. The math of loss is not symmetrical. You understand this in your body now, not just your head. You have tried to teach 2 people what you do. One gave up after 4 months. One is still trying, somewhere in level 2, losing money in pieces, calling it tuition. You could not give them what they needed because what they needed was not information. Every piece of information you have is available to anyone with a brokerage account and a library card. What they needed was the 7 years, the $31,000, the 340 journal entries, the 40 minutes in the parking lot. You cannot give someone the losses that produced you. Your screen shows the pre-market movers. It is 6:12 a.m. A biotech company has released Phase 3 trial results. The stock is up 180% pre-market on 4 million shares. You have traded this setup before. You know exactly what it tends to do in the first 15 minutes after open. You know where it tends to fail. You know what size makes sense, given your account and your risk tolerance. You have seen this movie. You know you do not know the ending. That is not the point. The point is that you know the probabilities better than almost anyone who will trade this stock today. That edge, compounded across 200 trading days a year, across 7 years of refinement, is the only reason this works. You open the platform, you set your alerts, you wait. Level 6. The trader who understood. You are 41. You do not trade the way you used to trade. The strategy is the same. The edge is the same. What changed is the relationship to the outcome. You made $580,000 last year. You live in a house that costs less than you could afford. You drive a car that costs less than you could afford. Not because you are frugal, because you learned something in year 9 that took 9 years to learn. The money was never the point. The point was the problem. The market is the only problem you have ever encountered that never fully solves. Every day it presents a new version of itself. Some days, your edge works exactly as you trained it. Some days, the market behaves in ways that have no historical precedent. You adapt or you lose. You have been adapting for 17 years. You are still adapting. You wake up at 5:30 a.m. by habit now, not by alarm. Your body has learned the schedule the way it learns everything, through repetition so sustained that the behavior stopped requiring a decision. You have spoken at 2 trading conferences, small ones, not the ones with Lamborghinis and the promotional materials. The ones where the people in the audience have journals with 340 entries and are somewhere in level 2 or 3 and came because they are serious, not because they want to be sold something. You tell them the same thing every time. You tell them that the information is not the edge. The behavior is the edge, and the behavior cannot be purchased. It can only be built, one loss at a time, one rule honored at a time, one parking lot at a time. They nod. Some of them understand. The ones who understand are already most of the way there. The ones who don't will lose more money first. This is not a failure of teaching. It is the structure of the education. Somewhere right now, a 24-year-old is watching a man in a Lamborghini explain risk management in 11 minutes. He is taking notes. He is going to open a brokerage account this weekend. He is going to deposit $15,000 that took him 14 months to save. He is going to feel something close to electricity. He is going to make his first trade on Monday. The market will be open. The algorithms will be ready. The 95% is not a statistic. It is a room, and the door is always open. The 5% did not find a secret. They survived long enough to stop needing one.